Hello and welcome. You're watching Markets Today with me, Sakshi, on Business Today TV. And here is where you will get all the updates about the stock markets trade right in the early trading action. Well, the stock markets have slipped for the third consecutive session today on Friday, following the weak global cues, the US markets and the Asian markets. The opening tick was slightly down, but the markets are extending their fall right now. If you talk about the current levels of the Nifty, it's now trading below the 17,500 mark at 17,443, down 1% or 186 points in trade. The Sensex has also given up that 59,000 mark right in the early trading action. It looks like a sea of red in today's trading action. Look at where the India VIX is. It's up 5%, trading at 19.8 levels, very close to that 20 odd mark. And that's what exactly I've been telling you. As soon as the markets inch closer to 20, that's when you see the markets fall. I've been repeatedly telling you that. Also, the broader markets, the mid and the small caps, they are the worst hit right now. 1.2% down for the mid cap 100 index. The Nifty Small Cap 100 Index also down by over a percent. Among the sectors, there are only two, stock or sectors that are holding up into the green: the IT and the pharma stocks. The IT is absolutely flat; it could slip into the red any minute. The pharma stocks are still holding up about 0.5% higher. But what's the worst performing sector right now? It's the Nifty Bank Index that's down by almost 2%. Among that, you can actually see the PSU banking stocks slipping over 2%. Private banks down 2%, and even the financial services down by 2%. The auto index is down by 1.5%. So are the royalty stocks as well. They are dragging the street. Metal stocks are seeing the sheen being ripped off in today's trading session as well. And the FMCG counters that were the gainers of yesterday also seeing profit booking taking place. Looks like there's more pain ahead, and the markets are not yet coming out of the steep rate hikes coming in from the US Fed. And perhaps there is some fear of how much could this really compromise on the global growth, especially the developed markets, and could there be a recession? There's nervousness about that. The market breadth clearly favoring the bears at this point in time. 41 stocks of the 50 stocks of the Nifty in the red. The advances only 9. Which are the stocks that are holding up in trade? It's Cipla, Apollo Hospitals, Divis Laboratories, 3 from the healthcare business. Tata Steel is up by 1.5%. There's big news right there. Tata Steel is going to merge 7 companies dealing in the metal space within the group to merge within itself. And that's the reason why Tata Steel stock is up, and so are some of the other Tata Group companies. Hindustan Unilever still holding up despite the decline in the overall FMCG pack. What's declining sharply? IndusInd Bank, Power Grid, Kotak Mahindra Bank, HDFC, M&M, all down by over 2% in today's trading session. So that's the kind of mood that you're looking at as far as the markets are concerned. While as I speak, there is slight recovery coming in on the Nifty, just about 30 odd points as far as the Nifty is concerned. Looks like there's a constant attempt by the bulls to come back or recover some sort of losses. We'll have to see how the day really pans out to be able to understand. What's also important for you to know today is that the rupee has slipped to a fresh lifetime low. It has slipped below 81 for the first time, and that's amidst the strong US dollar and the high US bond yield as well. Now, that's going to be some concern coming in. The Indian rupee has depreciated further, and the rupee is now at a fresh record low of 81.09 against the dollar. It did slip further to 81.13, which is a fresh lifetime low. Volatility, uncertainty have risen as the market comes to grips with a policy regime that is reducing liquidity after a decade of abundance in the stock markets. Now, the strength in the US dollar is putting pressure on the emerging market currencies and including the rupee. The domestic currency now may face resilience around 81 in anticipation of RBI's intervention right there. However, the direction will depend on the broad-based dollar movement as well. Remember, the 10-year bond yield has been trading at 7.38%, a level last seen on July 25th. That's up 7 basis points from the previous close, and the US 10-year Treasury yield has soared 18 basis points, highest in a decade, as traders weighed on the risks of recession. Meanwhile, Asian currencies were trading mixed today. China offshore fell by 0.3%. China renminbi fell about 0.3%. Taiwan dollar fell by 0.5%. Philippines peso was up 0.3%. South Korean won was seen gaining 0.3%, and the Japanese yen up 0.2% as well. So keep an eye out on that. This actually means, in case you've been looking to travel outside, or looking for people people looking to study abroad as well, all of your expenses will increase because of the weakening dollar. That's the impact that you will see. But the big news today, the Tata Group companies will be in focus because of the merger that I told you of. All the metal companies getting merged into the mother company, Tata Steel. Right now, the stock is up in trade. Apart from this, a whole host of other stocks are also in focus in today's trading session. You do have Hero MotoCorp that's now increased the prices of its two-wheelers by up to 1,000 rupees on various models, with the prices differing for each model right there. But this comes right ahead of the festive season. Many of you may be planning to buy a new two-wheeler right when the Navratri start on Monday. But right ahead of it, you see this big news coming in. The largest two-wheeler maker, Hero MotoCorp, has increased the prices by 1,000 rupees. More expenses for you amid the steep inflation. IT stocks are going to be under pressure. There's worry about slowdown in the world's biggest economy, US. To add to the woes, Accenture has issued its first quarter guidance, and that's much below the street expectations. However, back home, a renewed fall in the Indian rupee may provide some cushion to the IT stocks right there. So that's perhaps keeping the IT stocks flat in an otherwise weaker market. Overall speaking, the market's still in a very, very somber mood. We'll definitely look to watch out whether the markets get some push or a trigger to recover from this somber mood as well as we hit the festive season going forward. With that, I wrap up this edition, but do stay tuned on to Business Today TV for a whole lot more of information from the world of business and stock markets coming up right on your screens.